Welcome back to our channel, where we explore the fascinating world of cryptocurrency. Today, we have a topic that's essential to understanding the dynamics of Bitcoin, the Bitcoin halving. In this video, we're going to dive deep into the concept, the impact it has on the world's most famous cryptocurrency, and what it means for the future. So, if you've ever wondered about Bitcoin halving, you're in the right place. Let's get started. Bitcoin halving, it's a pivotal event in the world of Bitcoin that occurs approximately every 4 years. It's all about reducing the rewards miners receive for verifying transactions on the Bitcoin network. Bitcoin is often called digital gold because, like gold, it has a limited supply. But how is this supply controlled? Well, it's all thanks to Bitcoin halving. Now, imagine this process as a treasure hunt where miners compete to solve the puzzle and claim their reward in the form of new Bitcoins. This reward is what we call the block reward. This process is hard-coded into the Bitcoin protocol, and it's one of the mechanisms that make Bitcoin a deflationary digital currency. The Bitcoin halving is hard-coded into its protocol to control its supply. In the early days of Bitcoin, miners received 50 Bitcoins as a reward for each block they mined. This reward halves every 210,000 blocks, or roughly every 4 years. The last halving took place in 2020 when the reward decreased from 12.5 to 6.5 Bitcoins. The next halving is expected in 2024, reducing the reward to 3.1 to 5 Bitcoins. Bitcoin halving serves several crucial purposes. Firstly, it's a built-in mechanism to control the supply of new Bitcoins. With each halving event, the rate at which new Bitcoins are created is reduced, making it more scarce and valuable over time. Secondly, halving helps maintain the security of the Bitcoin network. As the reward for mining decreases, only the most efficient and well-equipped miners can remain profitable, ensuring that only the most dedicated miners maintain the network security. When the supply of new Bitcoins being created gets cut in half, it reduces the rate at which new Bitcoins are introduced into the market. This, in turn, impacts the supply and demand dynamics. If the demand for Bitcoin remains steady or increases, and the supply is reduced, it often leads to an increase in Bitcoin's price. We've seen this pattern in previous halving events. This mechanism is pivotal because it introduces scarcity into Bitcoin ecosystem. Just like gold, which is finite, the scarcity of Bitcoin increases its value over time. With fewer new Bitcoin in circulation, it can be compared to a digital form of gold mining. The first Bitcoin halving took place in 2012 when the block reward decreased from 50 to 25 Bitcoins. In 2016, the second halving occurred, reducing the reward to 12.5 Bitcoins. And the most recent one happened in 2020, cutting the reward to 6.5 Bitcoins. Miners play a crucial role in the Bitcoin network. They validate transactions, secure the network, and create new Bitcoins for their efforts. This can impact the profitability of mining, leading to a natural selection where only the most efficient miners continue to operate. Bitcoin halvings often spark great interest and speculation in the crypto community. Historically, they have been followed by significant price increases. Some argue that it's because of the reduced supply, which drives up demand and subsequently increases the price. However, it's crucial to note that historical performance doesn't guarantee future results. Then, what can we expect from the future of Bitcoin halving? With each passing halving event, the rewards for miners will continue to decrease, making Bitcoin even scarcer. Some predict that this scarcity will further drive up its value. But remember, investing in cryptocurrency is risky, and you should do your own research and consult with financial experts before making any investment decisions. Also, let's not forget the bigger picture. Bitcoin halving is not just about price speculation. It's about the fundamental principles that underpin this cryptocurrency. Bitcoin was created to be a store of value and a hedge against inflation. By controlling its supply through halving, it aims to maintain its scarcity and sound money principles, making it a unique and disruptive asset class. Bitcoin halving isn't just about price increases. It also reflects the network's maturity and the confidence it instills in users. As we see more halvings occur, Bitcoin transitions from being an experimental technology to an established store of value. Bitcoin halving is a crucial and fascinating aspect of the world's first and most famous cryptocurrency. It shapes the dynamics of supply and demand, potentially impacting its price, and reinforces the principles that make Bitcoin stand out in the world of finance. Looking forward, as Bitcoin's supply becomes scarcer and mining becomes more competitive, The halving events will continue to shape the cryptocurrency landscape. Some predict that they may influence Bitcoin's adoption as a global digital reserve currency. So, there you have it, Bitcoin halving demystified. It's not just a regular event, it's a fundamental mechanism that drives Bitcoin's value and utility, its significance, its impact on miners, its historical patterns, and its future potential. Keep in mind, the crypto world is full of surprises. So while history provides some guidance, nothing is certain. If you're interested in Bitcoin, make sure to stay informed and understand its dynamic nature. If you found this video informative, don't forget to hit that like button and subscribe for more crypto insights. Until next time, stay curious, stay informed, and stay crypto savvy. Thank you for joining us today. Stay curious, keep exploring.